Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Plug Power, ticker symbol PLUG. And here we are looking at it on the daily time frame. Did want to go over this in just, briefly before we look at it on the minute time scale, as their earnings release has been reported and they are currently down 8.65% in the pre-market, trading at a price of right around $1.90. But yeah, I just wanted to go over levels on the daily that do stand out potentially as support. I was hoping that price would be going up following earnings. I actually did buy one call, so nothing too crazy, especially with the price being right around $2. But just to, have some fun with it. I probably should have sold that earlier in the week, taken a little bit of a profit, strike of 250 expiring, I think, next Friday. So, probably going to lose a little bit of money on that, but, just having fun with it. I am a shareholder of Plug, and so I'm hoping that they go up. But I do feel like, depending on how the stock price responds to the call, I do think that we are going to be seeing potentially some more downside. And with that being said, levels that I drawn here, I did just omit a different retracement that I had drawn, and then I put this one I left this one up going from the low here of 221 up to the high of 334 because, going from doing a retracement from the bottom to the top would be suggesting retracements to the downside. So potentially finding support since we are going down. That is what I wanted to look at. And then I do have this prior low of 195, which was the 52-week low. I don't believe that was the all-time low. And so with 195 being here and current price being now below 190, that's not going to be support, but maybe we bump our heads up to that if we do bounce. But from this Fibonacci retracement, the 100% is at 221, but if we take a step back, we have the 1618, which is down to 151.2. I know we don't want to be hearing prices going down that low. I don't necessarily think prices going down that low, but with that being right around the price of $1.50, that does seem like a psychological level, $1, 2 quarters. And so I think that is a good level to be bracing for, just, psychologically, mentally preparing for that if we do see lower price action. And so if I switch over to the minute time frame, lots of volatility in the pre-market, as you might expect. And I'm going to adjust this so the y-axis is adjusted automatically. And yeah, it does look like we were, kind of barcoding yesterday during the after hours. Then got a little bit of volatility, dropped down to about, 187 here. And then, volatility to the upside getting as high as, on that minute, 212.3, and then the low 186. So, I think, of course, around earnings, there's going to be a lot of volatility. And so this is in response to the earnings report being released. And I will go over that. I do have it pulled up already. Their earnings call should be starting in about 25 minutes. I am connected and we're waiting, for that to start. And I will get us plugged into the audio and everything for that. It should be an interesting earnings call. I think this is the third time I've done a Plug Power earnings call. And one thing that I do like about the company, kind of makes me smile, is that their CEO is Andy Marsh, which reminds me of Randy Marsh from South Park, but, very different people, very different characters. So, we'll be hearing back from them. And tuning in just a minute. But I will go over their earnings report so we can get a little bit of that background. And then I see Hero of the Day, good morning to you. And Yuri K, what about Questive? So I might pull that up in a minute, but I do just kind of want to focus on Plug Power since that is the ticker of the hour. So I will be flipping over to look at their earnings report so we can just kind of get an idea. I believe that we could just see some of the highlights here. Plug Power shares informal financial updates with investors. Okay, so Wall Street. So I don't know if this is general market news. Here from Dow Jones, Plug Power successfully remediated previously identified material weakness in internal controls. Plug Power sees fiscal year of 2024 revenue of 825 million to 925 million. And so there's one behind me that let's see, I can remove this. And so I'll just read this one, then I'll switch over to the website. But Plug Power in charts. Q2 revenue from services performed on fuel cell systems and related infrastructure up. So, yeah, I think that hopefully what we're seeing to the downside is kind of a fake out, a spook in the market. And we'll have to, find out when we do get, tuning into the earnings call. And then Yuri K is also saying, or ANVS. So I'll pull those up in a minute. But yeah, I do want to look over that earnings report. And let's see here. And so just so you guys know, I'm going to share my display so it's not just filtered to the different windows. But yeah, I am connected to the live presentation, not yet available. And so probably in about 7 minutes, when it's about a quarter quarter after the hour, I will reconnect with this. I assume they'll be playing some music. I'm going to have that on mute so it's not no copyright claims or anything. And but I'll be listening to it so I know when the call starts, and I'll also be refreshing this. I have had issues in the past when calls start, but the website does not, refresh. So I'll be doing that. But yeah, here is the press release that I'll read to you guys, hopefully in an enjoyable, animated way. And this release did come out just this morning, I believe about an hour ago, August 8th today. And so yeah, I'll just read through this, and hopefully we gain some valuable insights from it. And I might, let's see. Actually, I was going to zoom in on it, but I don't want that to screw up the nice little plug that I have behind me right here. Yeah, it's white now, but if I switch over to this page, I don't want to screw that up. So I'm just going to leave this as is, and then I'll read this to us. Okay, so from Slingerland's New York. All right, coming out this morning, Plug Power, a global leader in comprehensive hydrogen solutions for the green hydrogen economy, today announced significant progress and strategic initiatives in the second quarter of 2024. These developments underscore the company's commitment to advancing the hydrogen economy and solidifying its leadership position in the industry. And so now I will go over some financial highlights. All right, and so we got 4 bullet points here. The first being that Q2 financial performance for Plug Power, who reported revenue of $143.4 million in the second quarter of 2024, reflecting ongoing growth in its electrolyzer developments and improved pricing on fuel and other product lines. They do have a note here on net loss, that the company recorded a net loss of $262.3 million in the second quarter of 2024, and that was influenced by strategic investments, market dynamics, and approximately $86 million of non-cash charges, such as depreciation and amortization, stock-based compensation, provision for common stock warrants, inventory adjustments, and impairment charges. Plug Power also recorded an earnings per share loss of 36 cents for Q2 of 2024. And so we'll have to look up what the estimate was. I can look that up on Webull or from some of those articles, but I'll do that real quick here. Might as well. So what was here I'm gonna bring back my sidebar because there's this little tab here. Earnings. Estimated EPS was a loss of 0.288 cents per share. And what we see here, they got a loss of 36 cents per share. So the actual was worse than the estimate. And so I think that's why we're seeing price retracting in the pre-market. But it could be it could be worse. And, so we'll have to see. It does sound like they've made some good strategic investments. And so, hopefully, we're starting to do moving forward. But, it does seem like we could be entering or maybe have entered a bear market. So good to be. I'm starting to get a little bit concerned, not necessarily concerned, but a little more cautious about all of my investments. Starting to think a little bit shorter term moving forward. But anyways, moving on with a third bullet point. Improvement in hydrogen margins. The Georgia plant's increased production capacity and strategic price increases across the hydrogen product portfolio have significantly improved hydrogen margins. This enhancement demonstrates Plug Power's ability to leverage its production capabilities and optimize pricing to boost financial performance. And then here, this last bullet point under financial highlights are that clean hydrogen production tax credit utilization. Plug Power became one of the first companies to leverage the PTC production tax credit for its liquid hydrogen plant in Georgia, optimizing financial performance and enhancing shareholder value. So that is some good news. And then I will also go over the key appointments here. We can see that Dean Fullerton has been appointed as the Chief Operating Officer. And so some notes here. Plug Power was pleased to announce the hiring of Dean Fullerton as COO. A veteran of the supply chain and logistics engineering industry, Mr. Fullerton brings 14 years of experience from Amazon, where he was responsible for global engineering services and oversaw operations, engineering, planning, analytics, reliability, and maintenance. His notable achievements include building the world's most complex automated e-commerce network and leading Amazon's hydrogen economy team. Mr. Fullerton will play a crucial role in enhancing Plug Power's operational efficiency and profitability by driving strategic growth and operational excellence. And so I feel like this is a great move. Not only Amazon, everybody knows Amazon, great, huge, successful corporation, and the amount of experience that he has there, it's not just a few years. He spent more than a decade there, and so I think that really speaks a lot to what he could be bringing to Plug, somebody being at a corporation like Amazon and then moving to Plug and being at Amazon for 14 years. I think that, is a great sign for the future of Plug, that this person who has spent more than a decade with Amazon, and clearly Amazon has had a lot of growth, then pivoting to Plug. I think that's a really good sign. And so I see a comment here in the live chat, program message. I'm not sure how to pronounce that. The CEO of Plug should go also as the COO and should be replaced by someone from Amazon. We're not they did replace the COO. They appointed a new one who is from Amazon. So I feel like got the point there. And so let's see here, looking at the operational and strategic highlights. But before I get into that, I'm going to flip back over to the chart just so we can see that price really has not moved, down 8.89% in the pre-market. And so we'll have to see if we do get some volatility getting closer to open, which is in about an hour and 15 minutes from now. But I'll continue on with the operational and strategic highlights. We got about 6 points here. And so the first one is on current and future electrolyzer developments. So the company deployed over 70 million of electrolyzer systems in the second quarter of 2024, representing a major inflection point in the scaling of this new offering. This mainly reflects 1 and 5 MW, megawatt, I'm not sure what that stands for, systems which have been delivered and are commissioning at customer sites, with titles transferred and majority of cash received on these orders. Given final commissioning and testing requirements, I assume that's megawatt systems, the majority was not recognized as revenue in the second quarter of 2024, but we expect the revenue to be recognized in the second half of 2024. So that's either going to be during the next earnings report, which is going to be covering the third quarter, which we're currently in, or the fourth quarter, the full year, which I imagine would be around February of next year. But considering that the majority was not recognized in the second quarter of 2024, I would think that would be in the next earnings report, perhaps coming out in October. I'm not sure when the next one would be. But we expect the revenue to be recognized in the second half of 2024. And then looking ahead, Plug Power plans to deploy an additional 100 megawatts of electrolyzers by the end of the year, further solidifying its position as a leader in the hydrogen industry and supporting global efforts to transition to renewable energy sources. The next bullet point is on revenue outlook. So Plug Power anticipates its 2024 revenue to range between $825 million and $925 million, which was brought up in one of the headlines that I saw over in Webull. And so this forecast largely reflects the company's expectation for revenue from our pipeline of orders in the electrolyzer, cryogenic, and material handling businesses in the second half of 2024. So again, more promising outlook for the next couple of quarters, so I think that's really good. Hydrogen plant joint venture with Olin is the next bullet point. And so we can see that there's strong progress is being made on the new hydrogen plant developed through a joint venture with Olin Corporation in Louisiana and is expected to commence commissioning in September of 2024 and generate liquid nitrogen in the fourth quarter of 2024. So yes, we've got a lot of great things coming, moving into the second half of the year, which will be reflected in that 2024 annual release that I imagine will be coming out sometime in February, so the next 6 months or so from now. This collaboration aims to increase hydrogen production capacity and accelerate the adoption of clean energy solutions. So a lot of great news there. I'm just going to scroll up for the next few bullet points. So we can see here that the Basic Engineer and Design Package, or BEDP contracts, is the next point. So Plug Power has secured 7.5 gigawatts in global BEDP contracts, including a 3 gigawatt contract with a significant customer in Australia for a green ammonia production that is moving forward with an engineering, procurement, and construction contractor. This partnership highlights Plug Power's ability to provide cutting-edge technology for sustainable energy projects today. There's also a bullet point on the Department of Energy, or DOE, loan process. And so Plug Power is progressing with the DOE loan, which aims to support the expansion of its green hydrogen initiatives and infrastructure for up to 6 sites. So that's pretty interesting, looking forward with government support. And then here, the last bullet point here, excuse me, the remediation of material weakness. And so the company has successfully remediated previously identified material weakness in its internal controls, strengthening its financial reporting processes and ensuring greater accuracy and reliability in its financial statements. So that is, of course, great news. Good to be seeing that the company is strengthening there. And here's a statement from the CEO, Andy Marsh, not to be confused with Randy Marsh. And so here, Plug Power CEO Andy Marsh stated that the second quarter of 2024 has been pivotal for Plug Power as we continue to make strides in our strategic initiatives and operational capabilities. The addition of Dean Fullerton as COO strengthens our leadership team, and our recent achievements in electrolyzer deployments and partnerships demonstrate our unwavering commitment to advancing the hydrogen economy. We are excited about the opportunities ahead and remain focused on delivering sustainable energy solutions that drive value for our customers and stakeholders. And then here are some details on the conference call, which we will be tuning into in just about 9 minutes, and details about plug power and other stuff there. And so I'm not going to focus on that stuff. Instead, I will switch over to here and see if we are connected, if there's some music going. I'm going to turn the volume off. So let's see. Okay, so we got something going on here. So this is great. And then now I am just going to, let's see, adjust my screen. Now it's just green behind me. I will have to adjust that. So give me 1 second there. Let's see. I am just gonna, the way that I do this is I just take a snippet of that window and I'll actually, yeah, you guys can see the chart there, so that's what you want to be looking at. So current price down 8.69% in the pre-market. And so, yeah, I'm just gonna adjust my window here. Excuse me. All right. Let's see. I think I've got it here, but it's hidden, so you guys can't see it. I'm just adjusting how this is filtered. So let's see. You'll see the consequences of my actions. There we go. Plug power right there. And I might make that adjusted a little bit more. All right, so hopefully that is acceptable. We will be seeing that. And if there are any slides to this, as we do look at their website here, it does look like there might be presentations, slides, but I imagine it's just audio. That's how it typically is. This is the third time, I believe the third time I've done an earnings report for Plug. And so, or an earnings call, I should say. And so, yeah, I'll connect us with that. And because the chart, as we can see, is not doing too much, just hanging out right around 190, I will pull up Aquestive and the other one, which is ANVS, AQST. This is one that I've covered on the channel. I've swung it a little bit, but I never held it onto it long enough to really make a lot of money with it. But yeah, let's see, switch over to the daily for them. Yeah, I believe when it came up to here, I trimmed because I was at break even or just about, and I just felt like it was a little too risky for me. I could have made, a little bit more, and that's how it always goes. And by break even, I made a small amount with it, but I could have made, at least 10, 16% more. But that's just the way it goes. It did pull back to, let's see, a low on the 5th, so just a couple days ago, or I guess I should say on Tuesday. Is that? Yeah, because, no, that would be on Monday. On the 5th, I did hit a low of $3.02. I believe my average was around $3.30. So, I'm glad I didn't have to hold on for a couple more weeks. I had that liquidity to move around. What do I see with this one going forward? Let's see. I'm just going to do this, very, very rough, but, we'll have to see. Maybe there's something here. It's possible this is, let's see. I'm just going to, should be horizontal there. Maybe that is a pennant, so that this could be breaking out to the upside, but it also could be a descending triangle. Those tend to break, whether it's descending or ascending, the flat portion of those triangles is what tends to break. And that's because you have this level here that is descending, and price is not able to get above that, and the tops are constantly, the highs are getting compressed down. But then this level here, it just continues to get retested and retested. And so what tends to happen is that this level gets retested so many times it actually breaks. There are no more buyers left at this level, and it goes down. As people are, selling at lower and lower prices, it eventually breaks lower. But this could, be launching higher. I could see another retest of this level here, which would be right around $3 a share, currently at $3.43. So something to consider there. And then Anoviz Bio. Let's see, it looks like I haven't looked at this one before. around $8 a share. Let's see, the market cap is 89.6 million. So not a huge company, but it's not super puny or anything. $8 a share there. And so what I would do for this is I would just do a Fibonacci retracement from this low 453 up to the high that was hit here, which was 1788. So I'm going to try to get that to be exactly to the penny, even though, it really doesn't matter that much. Lock that into place. And so it looks like we more or less retraced down to the 786. That's at a price of $7.39. And so, I would look for price to come to that level if this is not already there, but it has really just been trading in this. I'm going to take it from the top here. It's based on the closes, and then coming down to here, it's been in this downtrending channel. And so downtrending channels do tend to break to the upside, but just the fact that it hasn't, really found support at any of these levels suggests to me that there could be a lot of weakness there. And so I would really like it to see it holding 739, finding a bottom there. Maybe we have a double bottom here, quite possible, but I do think that there are a lot of concerns, a lot of weakness in the broader overall market. And so it's quite possible this could be coming down to the prior lows here at 453. So do keep that in mind. But yeah, I'm going to now switch back over to the plug power chart because we got just about a couple minutes before the call starts, and I am going to connect myself into the audio so I know when the call starts and we can enjoy listening to that together. At the time of the beginning of the call, I will mute myself so you guys don't have any background noise or whatever from me, and we can just listen. If you have any comments, put them in the live chat. We can engage with each other, share our ideas there. And then I will try to be responsive in the chart, whether that's putting levels or notes on the chart, so we have a little bit more excitement going on there. And I will probably draw up a couple levels here just so we can see the highs and lows of the pre-market and after hours trading, get an idea there. What might be acting as support or resistance. And so I don't hear any music or anything from the call, and I'm just gonna, we got about a minute left, so I'm just gonna be refreshing this periodically, just so we make sure that we're connected when they start. And so with that being said, I am going to put a horizontal ray here at 186. That's the bottom there. We want to be staying above that. I'll color that red. And then the high during the after hours pre-market trading was hit during pre-market, and that was at a price of 212.3. If I can get that lined up just right. Oh man, it skips that fraction of a penny, so I got to adjust it here. All right, so that is the range that we're in, and I'm just going to color this one green. That's the top there, the highest and the lowest. So that's the range we're dealing with, and now I will refresh the page. And while I do this, I'm actually going to just put in an ad real quick here. I don't put too many in the streams, but just to get that going. And so this should be starting here in just a second. Yeah, so I'll just keep refreshing this. And so, yep, okay, so we got, I'll just show you my screen here. We got this going on. This just popped up, but I think this is probably going to be stagnant. I don't think there are too many slides. And let's see. I'm not getting anything in the audio yet, so I will let you know when that starts, but I'm going to hide that because it's not dynamic like the chart will hopefully be during the stream. And so just looking at some of the live chat, you already said, great analysis, thanks a lot. Yeah, hopefully it was helpful going over the Aquesttive and then the other stock, I forget the ticker. Let's see, it was ANVS, so hopefully that was helpful. And then Ollie is saying, thank you, it's been a frustrating couple of years, but thank God average is in the single digits. Yeah, so I think that there could be some great opportunities to add, but also good to be cautious considering that things are looking pretty precarious as far as not just the U.S. economy, but really like the global economy. Seeing how the market's been responding to Japan, I believe, raising their rates, and that's affecting just the economy and the market overall. And so I feel like we might be in a bear market. So good to be cautious about, not being too overexposed and being able to buy dips and trim out at bounces, as we might be forming lower lows, lower highs, with bear market rallies, dead cat bounces, stuff like that. So good to be cautious. I am trying to be a little bit more, I don't know, I feel like short term focused, especially thinking about, I've been doing some stuff with unusual whales, experimenting with that service, that tool, and I think that's a nice way to kind of make, overnight gains or do overnight trades or daily trades. And yeah, so not into positions for too long. But yeah, with Plug Power, I remember when it was at $3, I was given a hard time on X about not going heavier in my buys, and I'm happy I wasn't, because now my average is pretty low. And so here, especially with the stock price being around $2, actually lower than $2. So I'm not seeing anything updated on their website. It does look like, oh, I had to hit the play button. It just started, and so I'm going to mute myself. I hope you guys enjoy.
Any forward-looking statements after this call or as a result of new information. At this point, I would like to turn the call over to Plug Power's CEO, Andy Marsh.
Thank you, Merle, and good morning, everyone, and thank you for joining us today. I'm here to share the progress and strategic developments Plug has achieved in the second quarter of 2024. This quarter marks a crucial phase in Plug Power's journey as we continue to build our leadership position in the hydrogen economy for the long term, while remaining focused on operational improvements in the short term. I think this one's important. In the second quarter, we successfully reached the final commissioning stage of 55 megawatts of electrolyzers, representing an expected $70 million in revenue. We weren't able to recognize much of that revenue, but much of that future revenue we've already received the cash for. We're on track to deploy an additional 100 megawatts of electrolyzers by the end of the year, reinforcing our leadership position in the hydrogen industry and supporting the global shift towards renewable energy power sources. This deployment reflects the growing customers' demand and our ability to deliver cutting-edge solutions. Our partnership with Olin Corporation is progressing well, with our new hydrogen plant in Louisiana expected to begin producing liquid hydrogen in the fourth quarter. Now, this project really exemplifies our capacity to enhance hydrogen production capabilities and accelerate the adoption of clean energy solutions across various sectors. And from a future point of view, we've also secured 7.5 gigawatts in basic design and engineering package contracts, and specifically 3 gigawatts with green ammonia in Australia. This collaboration underscores our technology prowess and ability to support sustainable projects worldwide. Our electrolyzer technology is among the best performing products we've developed, offering really the company a competitive advantage. Now look, the hydrogen fuel cell market really has not progressed as rapidly as we expected, but Plug remains committed to strengthening our leadership position and focusing on operational improvements. Market development, has been slowed by government policy ambiguity, impacting the timing of customers' decision-making processes. Despite these challenges, we are confident that our strategic initiatives will ensure profitable growth as the market develops. Look, we see it happening now. The government policies are maturing and will support increased adoption and market penetration of hydrogen. Now, for example, the electrolyzer market in Europe is, you see the demand starting, and the final investment decisions are coming along. So when you're working on these final investment decisions for projects that are over billions of dollars, you have to do significant due diligence and engineering. And really, it's part of what our customers are doing today. And we're deeply involved with our basic design and engineering packages, which is a key component of their efforts. We're actively engaging with partners to navigate these complexities and ensure the successful deployment of our solutions. Now, if you really look at that 7.5 gigawatts, even if only 1/4 of the activity leads to revenue, that could exceed $1.5 billion of revenue over the time, highlighting the substantial potential of this market. Look, I think this is no news to anyone. Financially, we're committed to strengthening our cash management practices and ensure profitable growth. Now, when we look at our expectations in raising prices, we've really exceeded our expectations. I think it's due to our strong relationships and seamless integration into many of our customers' operations have proven to be beneficial, which makes them willing to accept the price increase. So we are laser focused on cash management. We're focused on profitable sales, operational efficiency, and reducing operational expense. Now, when I take a look back at those statements, it's one of the main reasons I've asked Dean to join us. I really want to highlight the appointment of Dean Fullerton as our COO. Look, he brings an exceptional track record from Amazon. I've known Dean for almost a decade. He successfully led global engineering services and spearheaded hydrogen economy initiatives at Amazon. His extensive expertise and leadership will be instrumental in advancing our operational efficiency, driving profitability, and executing our strategic goals. I'm confident that Dean's vision and experience will greatly benefit Plug as we continue to innovate and lead in the hydrogen economy. With that, I would like to give Dean a few minutes to share a few words and give a high-level view of his goals and plans for driving our success forward.
Thank you, Andy. Thanks, everybody, for joining the call. You know, this is my week 2, but I came into this position eyes wide open and know the challenges that we're facing. And the areas that I want to focus on, mostly all focus around cost efficiency and cost out. And several of the areas I plan to focus on are getting my arms around the cost by function. I want to identify the opportunities to reduce costs and wring cost out. I want to assign owners to each of those initiatives and drive those to completion. My focus is going to be on building the green hydrogen plants, do it safely, on time, under budget, with a high level of quality. Another area of focus is going to be producing green hydrogen, again, on time and cost effectively, profitably. Implementing systems at our customer sites, first of all with a high level of safety, and then a focus on time and making sure that we're doing that cost effectively and profitably with a high level of quality. And then the last area that I want to focus on is reducing our inventory. Our inventory level, as everyone knows, is too high, and we need to focus on getting that cost down as well. All of these with a focus on reaching profitability. That's really my immediate focus in joining Plug, and I believe that we will achieve that.
Paul?
Thanks, Andy. A few comments from the finance team here. The first half for Plug reflects a critical inflection point in the ongoing transformation of the company. As we've discussed, we've embarked on a journey a few years ago to significantly broaden our solutions in the hydrogen economy and vertically integrate on our hydrogen supply with the added ambition of doing it based on green hydrogen. Given multiple market dynamics which have tempered growth in 2024, we have continued to nurture these offerings while doubling down on optimizing the operations and cash management. In the first half of 2024, we scaled up numerous product offerings that have culminated into meaningful deployment and sales into the market and set the stage for continued sales expansion in the back half of 24 and 25 onward. including a broad range of electrolyzer products, hydrogen storage and distribution solutions, and high-powered stationary systems, to name a few. We commissioned and have scaled up the first green hydrogen plant, which, combined with the Tennessee facility we recommissioned, provides us 25 tons per day of capacity and close to half of our current annual hydrogen needs, we have made great progress on our third facility in Louisiana that will provide us an additional 15 tons per day by year end. We focused heavily on optimizing the workforce for the company. Given the rapid growth over the recent years, we have added a lot of resources, and this year we have worked at optimizing that resource pool to maximize leverage. Since January 1, we've reduced the global workforce by over 15% through the Q1 restructuring and ongoing attrition where we've not backfilled. We've adjusted pricing across many equipment, fuel, and service platforms, which the impact can be seen in our Q2 results, particularly for fuel and service, and these pricing impacts will be even greater as the year progresses as we get full periods under these structures and launch additional pricing measures. We've completed many rooftop consolidations and have additional warehouses and facilities we are in the process of consolidating to our two main manufacturing sites in Albany and Rochester, New York. We've increased focus on asset leverage, particularly inventory. We've made a lot of investment over the last 2 years to enable the successful launch of many new product offerings, and this year the focus is on optimizing these resources, and we expect meaningful reduction in the second half as sales continue to ramp, which will provide a meaningful source of liquidity. Another significant accomplishment in the first half is the remediation of the material weakness, which will be reflected in our second quarter 10-Q filing. Being a growing, nascent new enterprise has made it challenging for the company to be sure we have the right processes and controls as we scale, and we have made significant investments in resources and systems to improve our controls and accounting processes, and this has enabled us to address the residual issues to resolve that material weakness. Looking at Q2 more specifically, we have made progress on our sales, cost down, and cash management initiatives, and I would highlight as an example the level of electrolyzers deployed, which represents a clear inflection point on this ramping activity. But these new nascent offerings with nuanced commercial contracts and products being used in much larger customer project deployments makes it challenging on the timing on revenue recognition. On a positive, as Andy mentioned, for the majority of the programs deployed where the revenue will be recognized in the second half, we've already delivered, we've transferred the title, and collected most of the cash via milestones, so this is truly a factor of timing. In addition, this large quantity of programs provides a substantial base of experience and insight to accelerate deployments based on learnings and the ability to constructively improve commercial terms to benefit the company financially and to enhance the accounting of these activities. Net cash used in operations combined with CapEx is down year over year 30% from lower CapEx and inventory reductions. We expect the cash burn rate to improve even further over the second half as we continue to curtail CapEx and leverage working capital further with sales and margin growth. Turning to the second half, we are laser focused on growing sales and margins and improving cash management. Our strategy includes many initiatives such as expanding our hydrogen network with Louisiana and leveraging Georgia and Tennessee while taking advantage of the PTC, driving more equipment sales given our expanded manufacturing capacity, which does not require more investment and provides the opportunity to readily source 3 to 4 times our current volumes, continue driving down cost downs with further workforce optimization, completing targeted rooftop consolidations, driving additional leverage on our material vendors, and driving enhanced fuel network efficiency and service cost profiles, and leveraging recent price increases and yielding full annual benefits as these continue to expand. In terms of liquidity, I would share that we have a strong, effectively unlevered balance sheet that we can lean on for liquidity and provide opportunities from a number of different sources. Our plan is to lean on the balance sheet for incremental capital needs in the near term. First, we have a substantial pool of restricted cash backing past project financings that releases quarterly at $200 million per year. We've discussed at length the opportunity to leverage inventory reductions, and we're targeting an additional reduction of $200 to $250 million by year end. Sales growth, price increases, improved mix, and continued cost downs will continue to improve operating cash flows. Based on the new transfer rules, we are about 2 weeks away from closing our first significant ITC transfer. with a well-known significant market participant. This will yield around $31 million for the ITC associated with the liquefier at the Georgia plant. And we've been pursuing varied debt facilities and are working with a party interested in equipment financing that we think can close in the next 4 weeks, and it is targeting a large facility platform with a meaningful first draw. And lastly, we're working closely with the DOE to finalize the $1.7 billion loan facility. We've made tremendous progress. We meet with them regularly and are meeting again in 2 weeks to continue their final due diligence and move the process along. We're extremely clear on the actions and the processes to successfully close this facility. And equally important, the DOE are clear in their interest and support to get this closed quickly. This facility is anticipated to provide immediate liquidity and enable us to accelerate the Texas green hydrogen facility build-out. I'll now turn it back to Andy.
Okay, great. Thank you, Paul. Thank you, Dean. And Kevin, we're ready for questions.
Thank you, sir. We'll now be conducting a question and answer session. If you'd like to be placed in the question queue, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 if you'd like to remove your question from the queue. One moment, please, while we poll for questions. And once again, that's star 1 to be placed in the question queue. Our first question is coming from James West from Evercore ISI. Your line is now live.
Hey, good morning, morning team, morning Andy.
Good morning, James.
So if I'm reading the financials correctly and your commentary correctly, it looks like there was some $50-ish million of electrolyzer sales that were not recognized in revenue during the quarter, despite being, delivered. And so I wanted to just kind of confirm that that was the case, because if that is the case, then you would have beat handily our expectations on revenue. And then 2, on the hydrogen fuel cells, the margin had a very significant improvement, and of course that's I think a lot of that's driven by the startup of your 2 and soon 3 facilities here producing green hydrogen for your own internal or your customer supply. And how should we think about those margins for hydrogen fuel as we kind of get into the second half of this year? So two kind of questions are, I guess, kind of around the quarter, but towards the back half of this year. But I think they make up a pretty important inflection point or improvement here that we're going to see here in the second half.
So James, I'm going to let Paul take the first one, and I'll talk a little bit about the second one. I'm sure Paul chirp in there too.
Sure.
Yeah, and your math is right. It's just over 50 million. It's a meaningful number that reflects such a step function change in the deployment of electrolyzers and how big that activity is to launch that. And yes, that would have been part of the Q2 numbers and will be recognized in the second half.
I think one of the important items there, Paul, is these systems are producing hydrogen, right? It is really, we're really kind of on the back end of documentation and training process. And because of, I think, accounting rule, not to get too technical, is it 605?
606, yeah.
606, that from a contractual point of view, that's just a final step. But the level of activity and work that's required is pretty minimal. So it's a big deal. And James, you're right about the hydrogen, but it's only really the start. We're beginning to see the impact of the price increases and some of the impact of Georgia and Tennessee. Since July here, Tennessee and Georgia's been operating 93% of the time, which will have a significant, and that's a really good number. You have, for example, the storm came through the other day, and we turned the plant off for 24 hours to make sure employees were safe. But I think you're going to see continuous improvement in margins driven by the price increases, and there's still a little bit more that you're going to see, coupled with the fact that you're going to have increased output out of Tennessee and Georgia. And then when St. Gabriel's come online, we're in a much, much better position.
Okay, got it. That's perfect. Thanks, guys.
Thanks, James.
Thank you. Next question today is coming from Colin Rush from Oppenheimer. Your line is now live.
Thanks so much, guys. As you have seen the timeline adjust for some of the industry growth, can you talk a little bit about what's happening with your suppliers in the supply chain and whether any of those folks are backing away from some of the commitments that they've made to you?
Yeah, that's a good, and Colin, I especially see the challenges more on the fuel cell side of the market. I think and it's not really with the suppliers backing away yet, but look, this has been challenging for all suppliers. I spent some time in Europe about 2 weeks ago and had some discussions with other people in this industry. But on the electrolyzer side, it's clear this market's growing, expanding, and it's really geared towards more industrial applications. You've heard me mention green ammonia, concrete, steel. I think on the fuel cell side, I think, people believe it's coming. But just like we're managing, for example, our stationary product to make sure the investments we're making, where we, ultimately believe that's our dominant product in time, that we're just managing the speed of that activity as far as investments go, because we believe in the 2030s, that's the revenue driver for Plug, both for fuel cells and hydrogen. So I haven't seen anyone say, we're not going to do it, we're not engaged. I mean, 3 months ago, I was at a conference, a hydrogen conference in Rotterdam, which had 6,000 folks, and every supplier wanted to talk to me. I think everybody's we're hoping that this would accelerate faster. That being said, you look at that 7.5 gigawatts of basic design engineering work we're doing. You look at, I didn't mention much the fuel cell business, but we can see, for example, our material handling business getting stronger in the second half of the year. So it's painful, Colin, and it's discussions you have to have, but I haven't had anybody come to me and say, we're going to increase prices, we don't want to do business with you. That really hasn't been the tenor.
That's incredibly helpful, Andy. And then just on the demand side for hydrogen, can you talk a little bit about the diversity of customers you're working with and the trend lines in terms of offtake sizes? It seems to me that there's some incremental diversity of industries that are taking the hydrogen and maybe starting with smaller deals and growing into larger deals. And that's it for me. Thanks.
Colin, I'm going to turn that to Sanjay.
Hey, Colin, how are you? So, again, on this question, right, as we've talked about in the past, our primary objective had been how do we drive the cost of hydrogen down for our existing customers, right, with the plants that are coming online, Georgia, Tennessee, Louisiana. But once we get to that 40 tons of production, the way you should think about the cadence of how things will unfold is we will likely also work with some of the industrial gas customers from a swap perspective. Those discussions are going on. As you said, they will start with a small volume, but could grow into bigger. Second piece of the opportunity we're seeing with some of the mobility application, different folks talking about that, the numbers could actually grow and grow pretty substantially when you look a few years out. And that's really one of the things we're also trying to do, right, is how do you make sure the offtake agreements are going to get a lot more bankable so that you can also start to think about capital sourcing of financing the build of the new plants going forward. So again, lots of discussion going on, lots of conversation happening from a prioritization standpoint, get costs down, do what we need to do for our existing customer, and do spot agreement with some that are in the need of hydrogen on a short-term and an immediate basis, and really start to structure contract in a way where this becomes a lot more bankable deals and we can start to think about a lot of different sources of capital.
Perfect. Thanks a lot, guys.
Thanks, Colin.
Thank you. Next question is coming from Craig Irwin from Ross Capital Partners. Your line is now live.
Good morning, Craig. Hey, Andy. Thanks for taking the questions. So I should start off by saying congrats on the PTC for Georgia. It's a nice milestone to see the company, collecting that very important subsidy. So can you maybe talk about, or get precise about the level of PTC you're able to collect? There has been uncertainty in the language. And then can you talk about other plants that are eligible for this or that you think should be eligible for this that are, in construction on the drawing board? How should this take shape?
Yeah, good question, Craig. And let me, I'm probably going to say a little bit too much here, but let me kind of step back and say that for Georgia, we work diligently to think through how one can leverage renewable energy credits, how we measure the electricity, how we measure the hydrogen coming out, and we worked with consultants and lawyers and others to make sure with the present policy guidelines, which are more strict than anything anyone expects to come, that we would be able to receive the PTC. And Paul, I think it amounts to about $2.60 a kilogram once you think about the costs. And Sanjay and Paul are both shaking their head in agreement, Craig. So that's how we were able to do it. And look, for the second part of your question, I think it's really clear that the regulations on the three pillars are going to become much looser. We won't be surprised if there's some announcement after the Democratic convention and a further announcement after the election. But you see people who were strong supporters of the three pillars, like Heinrich in New Mexico, who's backed off significantly. And there's a lot of engagement between the Senate, who really wrote the bill, and the executive branch to make sure that congressional intention is met in the regulations. And certainly Chevron has helped in that evolution. We're working really closely in making sure we understand in a very systematic fashion how, and I'm not going to say we're definitely sure, but how we bring Texas and New York in, for example, to make sure both of those facilities would be eligible for the PTC. I'm optimistic, but it is certainly evolving. Luckily, we've been able to engage with folks who are on the legal side, on the technology side, that gives us a great deal of comfort that we'll figure it out. But the looser regulations, I'm going to use the word looser, what I'm really saying is regulations that match the law will certainly help grow this economy, hydrogen economy, much quicker. And that message is really coming strongly from senators to the executive branch today.
Thank you for that, Andy. So my second question is about the balance sheet, right? So I know every day you think about, what can we do different? What can we do to lower costs? But I know you also think cash every day, right? Cash has been something important for you to manage over the last, couple years, and you're doing a really good job at this point. The $950 million in restricted cash in the balance sheet, that is coming off, as you said, this year. Can you maybe talk about whether or not there might be a way to bring this off faster? Is this something that we're stuck waiting for the turnover of these PPAs that are underlying the commitment to keep this as restricted, or do you have maybe a little more flexibility in there, hopefully, than what was originally calculated?
Thanks, Craig. That's a good question. And yes, it's something I think about 24 hours a day. I spend a lot of time thinking about liquidity and how we can best source liquidity for the company. And that certainly is a meaningful pool. I mean, effectively, it's like a deferred receivable, right? And so we have leveraged that in the past, as you probably remember, with Generate Capital, we effectively factored that receivable in the past. So that could be a solution, as an example, as a potential opportunity, as well as, I always say success begets success. And so as we continue to grow and scale and we show improvement, certainly one of the things that we'll do, and, probably won't be in the next quarter, or maybe not before year end, but could be early next year as we show progress, is start approaching the institutions that hold that and say, do you really need that kind of coverage on your outstanding exposure? So there's a lot of ways we can approach that, but it is an incredibly meaningful asset that we continue to think about how to best leverage and how can we, access the liquidity off of that asset base.
Thank you. Well, congrats on the operating progress. I'll go ahead and hop back in the queue.
Thanks, Craig.
Thank you. Next question today is coming from Manav Gupta from UBS. Your line is now live.
Morning, guys. I just wanted to focus on the revenue.
Good morning, Manav.
Good morning, sir. So the revenue guidance, 825 to 925, trying to understand what could drive you towards the top end of that range. In a good environment, what drives you towards the top end of that range?
Sure. I'm going to take a quick overview of this, and then I will let Paul add on. I think that if you look at our business, I would say there's three items. One is the electrolyzer business and making sure we commission and get the fulfillment of every item in the contract on time. With some of the challenges we had here in the second quarter with the final I's and T's, that we need to make sure that, and Sanjay, I know, is a laser focus on making it happen. The orders are there, the products are being built. We feel very comfortable about that, but it's the recognition of revenue, which has been we wanted to be cautious on because of what we experienced this quarter. I think the second item, there's a 1 and 0 world with our liquefiers. Sanjay has been, I'm going to let him kind of add on to this after I get done, but in that 1 and 0 world that can swing things $50 million with one order, that's, there's some real good projects he's working on, but, he sits back and wonders, is it third quarter, is it fourth quarter, is it first quarter? And, the third item is that the demand of the material handling industry is stronger than reflected. But we've changed the business model on our customers by moving away from using the PPA and setting them up with leasing partners. We've made some really good progress there, and we have customers who now are using their own third-party leasing partners. It's an industry where leasing is common. So I can tell you, there's one customer where it's 300-400 units in the auto industry, which is now, using a third party to help finance the project. How that evolves over the second half of the year, I'm looking at material handling, think it's called 165 to 175, and it could be over 200 if we're successful with that activity. Sanjay, would you like to add to that?
I think, Andy, you summed it up very well, but just, Manav, on the liquefier side, right, our industry position we feel pretty good about based on all the customer feedback. As Andy said, right, what's really happening here is these are big-ticket items, and, we're very active in a lot of different areas. Our 15-ton liquefier to our 30-ton liquefiers, we believe we have one of the best energy efficiency in the market. Our pricing seems pretty attractive. We also are actually deploying this liquefier even in our Texas plant. So the learnings and the value, everything we can bring to the customer is bar none. Having said that, as Andy said, right, do they get to FID in Q3? Does it end up becoming an opportunity in Q4? And there's we've seen some of those FID get pushed to the right by a quarter or two, right? We do believe some could come home here in Q4, but if it doesn't, then it ends up becoming really a 2025 opportunity rather than 2024 opportunity.
And when you think about liquefiers, Sanjay, it's really a North American event.
So far.
And and so far, and clarity in the regulations. People want to do the projects, but they also don't want to leave money on the table. And that is, so this final clarification of the regulations, I think, is really important to accelerating the market.
100%. Absolutely.
Thank you, guys. I'll turn it over.
Okay.
Thank you. Next question today is coming from Bill Peterson from J.P. Morgan. Your line is now live.
Yeah. Hi, good morning, Andy and team.
Good morning, Bill.
So first question I'd like to ask is about the sort of your core materials handling business. We've seen revenues kind of come in light. If we think about like a first half 24 versus first half 23 or even the prior year, I know you're talking about ASP uplift, maybe that and some recent, demand has been shifting on that. But are customers hesitant to deploy more equipment now because of this, I don't know, price increase? Or is there concerns about the company given the going concern from earlier in the year? Or is it really more of a matter of the market, just limited warehouse activity, things like that? So, and then just tied in, like, do we still see the seasonal uplift in the back half of the year? What contribution do you see in the back half, and how should we think about growth in 25?
Yeah. So, Bill, look, I'm not going to kid you that the price increases and the activities associated with the going concern certainly represented a shock to the system. I have, as many of you know, I am at heart a believer in you deal with the cards you have and think how you can get better. But in many ways, it actually opened up the engagement with customers. And it allowed us to start having the serious discussions about how to change the business model. And we have moved away from PPAs, which is good, which has impacted the initial growth of those customers because, as I mentioned in the previous question, we've had to move to third-party providers of leasing for the customers, almost like dealerships and cars, but we've had to work through that with third-party providers who also had tax appetites. We've made great progress there. We expect the second half of material handling to be at least, in the range of 1.75 to 2 times higher than the first half of the year. We spent a lot of times looking at those numbers and customers. Over the past 2-3 weeks, Sanjay, I think we've had 2 to 3 new customers, some of them with rather large deployments. We think the growth rate for material handling in 2025 comes back to normal. So, Bill, it's been a challenging exercise, but it actually has taught us in many ways the meaning of our value proposition. I've had one of our larger customers tell us the value proposition breaks down at $11 a kilogram for hydrogen. That's a real great data point because when you think about that $11, we're out there about $8.50 today, and that shows that there's value being created and customers recognize it. But look, there's a lot of discussions when you have those 2 big issues you mentioned, but I feel that we've really been able to overcome those challenges.
Appreciate the call there, Andy.
Thanks, Bill.
Thank you. Our next question today is coming from Dushaya Ailani from Jefferies. Your line is now live.
Good morning. Thank you for taking my questions. Dean, congrats on the new role. Maybe this is for you. I know you have been there for 2 weeks now, and you have kind of talked about some of the areas of cost efficiency and cost outs. Maybe could you talk a little bit about what some of the low-hanging fruits are, where we could see that come from? And then secondly, how do you guys think about the margin cadence for the second half of 24? And I'll leave it there. Thank you.
So I'll let Dushaya. Good morning. I'll let this is Andy. I'll let Paul take the second part of that, and I'll let Dean take the first part.
Yeah, I think it's a little too early to provide any details on this call, but I've talked with Andy and many people a couple months before joining. I've been aware of where the challenges are, and my first 2 weeks I've been digging into that. And as I mentioned, a lot of it's around manufacturing. It's reducing our inventory. It's getting cost effective when it comes to producing green hydrogen and implementing our fuel cells and our systems in the field. And that's really where my focus is going to be, is diving deep into those cost structures, identifying where we can wring those costs out and lower those costs and get to the point where we'll be profitable in each of these lines of businesses. A lot of it is going to be around identifying those opportunities and the rigor and the discipline with managing through each of those projects and tracking those to the point of profitability. This isn't going to happen immediately, but to your point, there's definitely low-hanging fruit and short-term things we're going to focus on, and then there's obviously bigger monsters that are going to take a longer-term view of.
Yeah, and I would just, I guess on the margin progression, as you guys have seen historically, we've always had this phenomenon of the 2/3, 1/3, where there's 2/3 in the half of the sales in the second half. That's certainly what we're seeing this year. That implies doubling the sales in the second half, and Plug, has tremendous volume leverage opportunity. So that has a big impact for us. In addition to the getting full quarter benefits of all of these cost downs and price increases that we've been rolling out, and on the fuel side, Andy talked about Georgia and Tennessee being up and getting full quarter impact of those, as well as we've made real good strides on fuel efficiency measures, and that's really going to be impactful as well as we move through the balance of the year. So you will see you'll see certainly positive and continued progress in Q3 and even more progress in Q4 as we move through the balance of the year.
Thank you.
Thank you. As a reminder, that's star one to be placed into question queue. Our next question is coming from Sharif El-Maghrabi from BTIG. Your line is now live.
Hey, good morning, team. Thanks for taking my questions.
Good morning, Sharif.
Morning, Andy. So I've got a couple on Louisiana. First off, can you tell us how hydrogen production is going to be divvied up there? Is it a straight 50-50 split between yourselves and Olin?
Yeah, so I'm going to let Sanjay take it. Sanjay sits on the board of the joint venture, right. So I'm going to let him handle that question.
Yeah, so Sharif, on that, so obviously it's a 50-50 JV from an ownership standpoint, but Plug is responsible for marketing all that hydrogen, right? So that's what would happen. We would actually consolidate as Plug, number one. Number two, we'll be responsible for marketing, pricing strategy, and everything else. So the access of that hydrogen between the partners, Plug will take a leading role in terms of how it gets priced, how it gets marketed, and who it goes to.
Okay, that's helpful. And then for my follow-up, do you need to further refine the output of the chlor-alkali process at Louisiana to produce 15 tons of liquid? And if so, is the margin benefit there? What is the margin benefit there relative to your other projects?
Yeah, sure. Keep in mind, right, we've already done something like this before with Olin, right? We have an existing plant in Tennessee, so we know what exactly has to happen.
Even though we own 100%.
Exactly, we own 100% of Tennessee. So there's yes, you have to purify, then you also have to increase the pressure based on what the pressure of that hydrogen comes out from the Olin side. Almost think of this like a pipeline coming into our liquefier. Not a whole lot different than, the PEM electrolyzer. It's a slightly different kind of an electrolysis process, right? So, yes, you have to purify that. You have to increase the pressure as it goes into the liquefier. Look, the reason we're doing this partnership is because we both believe that economic value of, them just selling the gaseous hydrogen versus Olin also getting into the liquid hydrogen market is a win-win situation for them. We see this being a low-cost opportunity for us, so it's a win-win situation for us as well. And look, and rather not get into the specific exactly what that cost looks like and everything else, as we'll continue to also do the pricing negotiation. But similar to Tennessee, and frankly, if anything, maybe even marginally better than the cost profile in Tennessee, we feel pretty good about what this is going to bring to the table for us from cost reduction as well as expanding the market opportunity for that hydrogen. Yeah. Anything you want to add, Andy?
Yeah, I would just say, if just the picture in your head, Sharif, the hydrogen coming out, is, as Sanjay mentioned, purified before it goes in the liquefier. But that waste stream hydrogen and purification system essentially replaces the electrolyzer and rectifier and substations. And the rest of Louisiana is exactly a duplicate of Georgia. So it's, so it's a very straightforward, it's just essentially doing that one block differently. And I use the word differently, as Sanjay said, exactly how we do it in Tennessee.
Okay, that's helpful. Thank you. Thank you both.
Thank you. Next question is coming from Chris Sung from Wolfe Research. Your line is now live.
Hi, good morning. Thank you for taking my questions.
Good morning, Chris.
Hey, good morning, Andy. I'll start with, I saw at least one competitor announce capacity reservations agreements with electrolyzers developers developing like the hydrogen hubs. Is that something you're also pursuing, and maybe any updates on your participation in the 3 hubs that have officially launched? Thanks.
Okay. I'll let you take the feedstock, and then I'll talk about the hubs.
So, again, I think as a part of this 7 gigawatt of basic engineering design packet, right, we are starting to have conversation with the customer. Some of these opportunity are multi-gigawatt opportunity, right? So it's a mega project for them. Obviously, it's a mega project for us. As Andy talked about it, even if we actually do 1/4 of that, it's a substantial revenue opportunity. But we're going to need to make sure that we're planning the capacity the right way, right? What does that reservation look like? What the cadence of staff production needs to look like? And that's one area that, as Dean talked about, him and I are going to be working very closely together to make sure that it's being planned properly. We're thinking to the reservation right. How do we manage that? It's a win-win for both parties. Now, there is some discussion going on that we're having with other customers that are not a part of this 7.5 gigawatt of basic engineering design packet, where they're talking about potentially doing a reservation as they are looking at mega opportunity in the European market. So some of those discussions are happening as well. But one another thing we also try to be very, very careful about in this market is there are projects and there are projects, right? We're really trying to make sure we're aligning with customer in terms of helping them with what we bring to the table, but also making sure that the projects are in fact going to eventually get to that final investment decision criteria, because there's a lot of things that has to happen. Funding has to come in place. So we do have some of those opportunities brewing as well, could be pretty meaningful and substantial, and that is not a part of the 7.5 gigawatt of basic engineering design packet that we're talking about right now. It would be incremental to that.
On the hubs, first, I don't want to get ahead of hubs announcements as far as what they want to say about the details. But as we've talked about before, every hub in the U.S. Plug is participating in, including the announcement of West Virginia where they have details. So we're pleased that they're moving ahead. I think over the next year, even with the hubs which have come to agreement, there's still a great deal of planning and work to continue. And I can tell you there's a team at Plug on the business side, that as well as the technical side, that's working with the key decision makers at all the hubs to make sure that they evolve, and that, look, we're there, we're at the table, and that's the key item. I think people have to realize, and I've said this before, how the PTC and the DOE loans are really the short-term vehicles for the U.S. government to drive hydrogen production. Long-term, the hydrogen hubs across the United States are really important for building this industry. And look, there's still lots of work to go on to really capture that vision. On top of that, there's the technology investment where Plug was the leading company in receiving grants from the DOE, where about 20-25% of that revenue or activity investment Plug is involved with. A lot of it associated with our plant in Rochester, where there's technology improvements for both electrolyzers and fuel cells built in. So those two won't be overnight, but they're really important for the U.S. having, from a national security point of view, from a jobs point of view, as well as for a clean climate point of view.
Thanks, and just for that's really helpful color. And just for a follow-up, I think Dean touched on this, and the high inventory levels is one of his priorities. but are you able to provide some context on what's in inventory broken out by product line?
I think that, Paul, I don't think we make that. Do we make that public?
No.
Yeah. And I think that probably, I would just say, probably a lot, there's probably a lot to support our energy build out this year. And we do have goals that we can reduce that inventory down to about $700 million by year end, supporting all the product lines.
All right, fair enough. Thanks so much for your time. I'll turn it over.
Okay, thanks, Chris.
Thank you. Next question is coming from Sky Landon from Redburn Atlantic. Your line is now live.
Hi, thanks, guys. You mentioned that you're potentially expecting some news on the 45V rules after the Democratic convention, and that you'd expect a further announcement after the election. I appreciate timing is perhaps uncertain on this, but perhaps you could talk us through your current thinking on how quickly this could come through, and if you still think it's a 2024 event. And then related to this, from your conversations with industry and customers, how quickly after the clarification on the rules do you expect to start seeing green hydrogen FIDs start flowing?
Yeah.
And then a second question. Sorry, and a second question then on OpEx costs, perhaps. Expectations will slightly beat again in 2Q after they also beat in 1Q. Maybe you could run through the work that's been done here and talk about if there's any more costs to come out going forward. Thanks.
I'll let Paul handle the second part of that question, Sky. I think where you will see potential changes after the convention probably has to do with with the three pillars, and I know you're well versed in the three pillars, Sky. I think you'll see relaxation associated with additionality. And I think that nuclear power, as well as hydropower, and maybe states with renewable energy programs receiving relaxation on additionality. I think when you look at post the election, you may see that the regulations associated with time matching will start looking more like Europe, and I think the regionality issues will be slightly less restrictive. And I think that's probably what will happen. And when you look at it, obviously, I think we may have talked before the Chevron announcement, and I told you Chevron was going to have a dramatic impact, especially on those two other items, and I think you'll start seeing that. I think from a decision making for FID, I think many of these programs, it takes probably 18 months to get to FID. I think in many of the U.S. programs, companies, I know of some significant programs where work's being done, but I think it's a year for the big projects, the gigawatt scale project, after the announcements to get to where you're actually issuing POs. So I think that's probably the time frame once and this is especially with the electrolyzers. I think there may be smaller deployments, which will happen more rapidly than that. But when you're talking about investing $2 to $3 billion, it's going to take time. Paul?
Yeah, and on the OpEx, as you've made reference, we've been able to demonstrate that the benefits of our actions of curtailing and optimizing the workforce. Some of the rooftop consolidations obviously are, most of the impact is in operations, but there's certainly a piece of that benefits the OpEx as well. And I would tell you, as we move forward to the balance of the year, we're going to maintain our discipline and focus on making sure that we're, where we can continue to optimize, that we're doing that, and that we're not investing in incremental costs in the near term on things that aren't benefiting the short term. So we're really being scrutinous in the things we're doing and trying to keep that curtailed and down, and we expect that to continue.
Great. Thanks, Andy. Thanks, Paul.
Thanks, Guy.
Thank you. Our final question today is coming from Jordan Levy from Truist Securities. Your line is now live.
Hi, all. It's Henry on for Jordan here. Appreciate you squeezing me in at the end.
Hi, Henry.
You touched briefly on this, Andy, before. I just want to get anything more you have on how production has gone at Georgia and Tennessee over the last quarter or so. Any kind of big operational items or learnings that have come up that you plan to take away for future plants?
Yeah. I think, Jordan, one of the big learnings, and this is really important, and it has dramatically improved the efficiency of the plant. It's really controlling. You have to remember, this is the first plant in the world that this has happened. Is controlling the interaction between the output of the electrolyzers with the liquefier. And we have seen from the month of May to today, just a dramatic improvement that in our control loop, and it's been great work by one of our engineers about making sure the output of the electrolyzers always are in sync with the production output of the liquefiers. And if you put too much hydrogen in, you're going to be wasting hydrogen. And that has been a learning that I think is uniquely positioned Plug as we fine-tune that control loop. We've had some, there's been, the plant itself, I think was it May or June? I think June was up 93% of the time. So we feel really good about that plant. And I think a lot of it has to do, as I mentioned, the hurricane came through, or the really rain came through that facility. We had to shut everything down for a day, and that's just kind of, and that's going to happen. But, I think we're probably, the fellow who built the plant, who came from one of the leading oil companies told me it takes 6 months to burn in a plant, right? And I think we're about at the stage where that plant's burnt in right.
Awesome. Thanks for that. And then just a quick one on the balance sheet follow-up. Can you just remind us again on the cadence for that restricted cash flow release, that kind of $200 million annual? Is there any seasonality that we should be aware of for that?
There's some fluctuations, but I think using 50 million as a proxy is a pretty good estimate per quarter.
Cool. Thank you all.
Thank you. We've reached the end of our question and answer session. I'd like to turn the floor back over to Andy for any further closing comments.
Thank you, Kevin. And I like to remind people of the short term and the long term. And the short term is really driving this company to be operational, efficient, and profitable. But the long term is critical. And you look at the activities going on with the basic design engineering work, you look at the activities and the deployments with electrolyzers. Nobody's doing what we're doing with PEM electrolyzers anywhere in the world. You look, and I haven't spoken much about our stationary products. One of the leading data center operators came to me and said, we have visited 14 people who have talked about building stationary products. They tell us we're far ahead in the race. And Plug's goal is not only to be operational, efficient, and profitable, but continue to grow at a rapid pace. And I believe between our electrolyzers, I believe between our ability to build hydrogen plants, and on top of that, our fuel cells, we continue to strive to make improvements and develop products which are unique and will be valuable for the development of the hydrogen economy. I look forward to talking to many of you at investor conferences as well as at the next earnings call. So thank you, everyone.
Thank you. That does conclude today's teleconference and webcast. You may disconnect your line at this time and have a wonderful day. We thank you for your participation today.
So hopefully you all enjoyed that call. I think it's pretty cool, I must say, to be charting it, trying to identify levels during it. 195 as of right now. The 52-week low is 195. Are we going to break it? Actually, no, it's 193. We did wick below it a little bit here, in the first couple minutes of trading, first minute of trading, really. So, yeah, I mean, but I think it was really neat to see the low from 186, recognize that, we've got this consolidation over here. I was thinking that could be, bearish consolidation at a bottom rather than getting a bounce. And then once we started to consolidate here, I was wondering, is this a little bull flag here, consolidating below 195, that it might be taking off? And that is what we ended up seeing. We got a little bit of a move up, and then I was wondering if it would be retesting that level that it broke out from. It actually pulled back lower, and then that made me think, well, maybe I'll do a Fibonacci retracement to see if it pulled back to a significant level. And the golden pocket is the Fibonacci retracement between the 65% retracement and the 618. Commonly, Fibonacci levels don't include the 65% retracement. They go 786, 618, 50, 382, 236, and then 0, to the top there. And, so I add the 65% retracement just because I think that the golden pocket is interesting to consider because, this did pull back to the 618, but actually, the 65% retracement getting to that golden pocket could have gotten a little bit better of a dip buying opportunity there. And then from that, we did, break out higher. And I had suggested that this was a descending triangle, which you can see here, which tend to break to the downside. That's because of multiple tests of this flat line that gets weaker. Buyers dry up while you have sellers, increasingly selling at a lower price here. So it tends to break to the downside. We got that, the flush down to the golden pocket. Bounce breakout above this downtrend, and then we kind of retraced to that level a little bit, bouncing from the 50% retracement at 194, and now it looks like trading above 2. So I think that's looking really good. What we did put in a lower low for the 52-week low, and we might be going even lower, so do take any bounces right now as take them with a grain of salt because, this is the first 15 minutes of trading, always volatile, especially with, the markets being kind of precarious now, having just put in, all-time highs in the S&P 500, semiconductors, and starting to pull back some from that with, the crash over last weekend. So good to be cautious as always. And then on that note, I'm going to take a look now on the daily time frame. Lots of stuff that I just drew here, so it's a little bit cluttered, but I do like a lot of those notes. So I'm just going to leave them up there just because I find that to be really neat. But so I did this Fibonacci retracement here, going from this low of 221 up to 334, and from that we see the 1618 at $1.51.2, or right around $1.50 to $1.52. It's quite possible price will come down to there. So, while I think the best way to trade is, to have that on the mindset that if price does come down that low, am I going to be a buyer? Am I going to be a seller? Am I going to be panicking? And so just having that on the radar, if it does come down to that, there's no panic. Buying, selling, I think selling down there could be selling the bottom. And so I think it's good to plan for that. What I like to do, and the way that I trade is, it can be fairly boring. I place orders and kind of forget about them. And so what I might do, probably, I feel like it could take a couple weeks before it gets down there. If it does go down there, I might place an order there. And if it fills, great. If it doesn't, that's fine too, because price is going up. So 150. And I have to say that about a month ago, maybe a little bit more than that, I was given a hard time when price was at $3 a share, because I was posting about how, I do very slow dollar cost averaging, that I might accumulate a couple shares, just a couple shares at $3 a share. And somebody was putting pressure on me. Oh, you got to buy more than that, hundreds of shares, thousands of shares. And, you got to trade the way that works for you. Don't listen to other people. Don't listen to me, because it's not just, finances. It's also psychology and emotions. We all manage that stuff differently. And so I think having 150 on the radar is good to better prepare ourselves for that possibility, and recognizing that when there was pressure by the community to be buying at $3 a share, that is a discount. We could potentially be seeing a 50% discount at 150. So, always be prepared for the downside, and don't listen to other people. You got to do what works for you, and consider what other people have to say. But my average, I've now accumulated a couple, maybe 300 shares since then. My average is pretty close to the current price. I think it's around 248. So, you got to trade in the way that works for you. So that's all that I have to say about that. And I do see that there are some comments in the live chat, so I'll look at those. And I was going to look at OPK before closing this down. And I will do a video on Plug Power. It's possible I'll do it at the end of the Rocket Lab stream. I'll do their earnings call this afternoon. But I might just do a Plug Power video after Friday close, just to give us a little bit more details, a little bit more perspective. And so, yeah, I'm just going to catch up on the comments, and then I'll go over OPK. And let's see. Yeah, good morning, Antoine. How's it going? Do you have any shares of Plug? Yeah, I have. Let's see. I can tell you exactly. I think I have 300 shares. I've been accumulating. I recently learned about selling cash secured puts. And so I've been accumulating shares by selling cash secured puts. And so, for me, my position, like I said, is not that huge, especially, a lot of people go much heavier than me, or than I tend to. Yeah, so let's see. I have, let's see. I have a call with a $2.50 strike that expires on August 16th. I don't plan on exercising that. I'll probably end up losing a little bit of money on it, but that's fine. It's not a huge premium. And then I do have 300 shares, but I have sold covered calls. I tend to do that with positions that I go long in, just to kind of hedge. I never time the bottom perfectly, and so that's a nice way for me to make money on the shares that I hold, and I always sell them with strikes above my average price. And so I've sold, let's see, here. I've sold one with a $3 strike that expires tomorrow. And then, let's see. Yeah, I'm just trying to see the best way for me to look this up. So 4 calls. I have 3 that expire this week, one with a $3 strike, one with a $3.50 strike, and one with a $4 strike. And so if price does close above any of those levels this Friday, I then have to sell 100 shares at that price. And so for me, with my average being around 248, that is me taking some profit and lowering my risk. So I'm fine with that. But if it closes lower, that's fine. I can just dollar cost average in and get some more shares. My average, as I mentioned, is around 248, lower than $3. So good to not be FOMOing in at tops, or, if a lot of people are really bullish, when it's around $3 a share, this red line here, psychological level, you gotta, if the crowd, the herd is going one way, you gotta be thinking, well, what's the other side of this? And that is, that people might be selling into their overly bullish sentiment. And so right now there might be overly bearish sentiment. And so good to just be calm and wait for 150 if that does happen, or 152, maybe 155 is a good level, or 169, let's have fun with it. But, maybe those levels don't get hit and this is the bottom. So just good to be, leave the emotions on the side, and try to, rather than, be like a victim of the psychology or the emotional aspect of trading, I like to just think about the psychology behind the trading, and then to use that as kind of an advantage. I'm not a master of it. I just think it's really interesting. And you can see a lot of that stuff reflected in the charts. But yeah, so let's see. Okay, so Yuri is saying OPK, so I got to look over there in just one second. And hey, Benjamin, how's it going? Good morning. So yeah, I'll pull up OPK and then I'll do a video on plug likely after close on Friday or over the weekend. I'm not working until Monday next week. So I should be able to get some videos out over this weekend, but I also got to do yard work and housework and stuff like that. So I might not be terribly productive over this weekend. And I will be doing the, the weekly trading plan coming out on Saturday. That's available for members only for the first week. And then the one from last week will become available to the public tomorrow after the close. And so to become a member, it's just 99 cents a month. And, I think it's definitely well worth it. I just kind of go over what I plan on doing for the weeks ahead. And lately, I have been doing trying to get more into unusual whales and trading options overnight, because I found that I'm trying to gauge how much the stock prices can move versus how much the options can move overnight, something like that. And can you get a 20% move in buying shares overnight? That's a little difficult, but I think that's fairly reasonable to be able to do with options. And so I think that 20% is a good level to be trimming at. And I was a little bit aggressive this week with some stuff, so I did take some losses. And but I think, that's a learning process for me. And I will be doing probably looking at unusual whales for close tomorrow to maybe buy either some calls or puts, or maybe just one call or put over the weekend, depending on, what's happening. And so actually, I've done this retracement here. I'm looking at OPK now, which was requested. And, from this Fibonacci retracement, it does look like it pulled back to, a little bit below the 786, spent one day dipping below that, but we have not gotten any closes below the 786, which is at a price of $1.26.9. So I think, Fibonacci retracements are very useful tools. It does look like if we pull up the volume profile, there was, some volume there that acting as support based on this consolidation over here. I find that interesting. And then also this line here, I believe that's the volume point of control. So kind of, where that, like average is. And that is right, where we did wick down to. So I find that really neat as well. And, while this retracement does have levels to the upside, since it's from the bottom to the top, that's really a retracement to find support at, where a bounce might be. And so we did see that at the 786. So what I am going to do is delete. Actually, no, I won't delete that. I'll leave that up because I just find it to be, neat to look at those and to, kind of, review past, bounces and see that, that was a good level, the 786 there. Even though, I just talked about the golden pocket with a plug, but, the golden pocket, 786, those are good dip buying levels, because right now we're above that golden pocket with current price at 143.5. But if I do a Fibonacci retracement from the top here, 156 down to the low here, which was hit on the 5th on Monday, as you might expect, that being at a price of 123.1. I'm just going to adjust those levels from the top so we're lined up right there. And I'm going to color this yellow so it does stand out. And there we did get a wick up to the 786. So just like on the way down, we pulled back to the 786. On the way up, we moved to the 786 at a price of 149. We so far have hit a high today of 150, also being a psychological level. I talked about 150 possibly being a dip buying level for plug. It seems like it could be a trim the top level for OPK. While, one might be thinking, hey, this, was recently at 156. We could blow past that. I think that, the move so far today that we've seen, let's see, I can do a measurement to the current price or just look up, it's up 12% on the day, but going up to that Fibonacci level, that's up, let's see, it says it's up 12%. On the day. That's because it's relative to yesterday's close, which was down here. So if I do a measurement from the close of yesterday up to the current price, that's right around 12%, as it is saying in the top right, above me by the big number there, 143.5. But getting to that Fibonacci level, the 786, that's a 16% swing. The high of the day is around 17%. So, if one is up in this, I think it's a good time. You do you, don't listen to me, but I think it's a good time to trim because, we saw a retracement to the 786 on the way down, and we've seen a bounce to the 786 on the way up. Maybe what we're going to see next, you can probably guess what I'm going to draw up here. I'm going to do a Fibonacci from the low of 123.1 up to the high of 150. And let's color this, light blue so it stands out. Where is that 786 on there? That is at a price of 128.9. And so maybe we see a dip buy opportunity around there. Maybe we see a pullback. And so that's why I think it's at least a good time to trim because it did go up to a technical level just based on Fibonacci retracement. So pretty simple, like non-biased analysis going from a low to a high and then a high to a low. We picked out two technical levels. Doing that again, if the high is in for today, it could be coming back to 128.9, or maybe it just comes back to the golden pocket, which would be ranging from around 132 to about 133 or 4. So that's the 65% to the 618 retracement from going from the low to the high there. So hopefully that's helpful. And so I'm actually gonna close this down because I want to get on with the day. And I will be doing another stream later today with Rocket Lab. I do see, and so Ardij, I'm not sure how to pronounce your name. Sorry about that. But yeah, I will put timestamps on this so you can look over how the chart responded to earnings. As far as Plug Power goes, it does look like we're trading right around $2 a share. If I look over at the minute time scale and adjust that axis, I was going over all of these levels during the earnings call. So I think it could be a pretty interesting one to look over. There was a lot of dynamics, bull flags, retests, breakouts going on with the chart. So I recommend reviewing that. After I close this down, I will add timestamps to that is part of the reason why I want to close it down. And looking at the chart, having just mentioned bull flags, maybe not because it is kind of sloping down a lot, but it's quite possible that we are forming another bull flag here. And so I would look for, a potential breakout above 210. Look for that. That could be, a sign that we are taking off. Because I think that the bottom could be in with the pre-market low of 186. So do look for that. And let's see. I'm just going to pull up Blink here real quick, and then I'll close on that. Benjamin is always asking about it. But yeah, I think that, from the video that I did, I believe, I did this Fibonacci retracement, and did I have an extension? I did not include an extension on it. And so, yeah, with that being said, we're back to, I believe I mentioned 221 or 222. That's this level, which I'd gone over a while ago, as I'm sure you'll remember, Ben, this, descending triangle. And we did break out from it, but it's possible that what we're seeing now is a reckoning, that we are going to be seeing, a break of that prior low of 218. So far, we haven't hit a new 52-week low, but that is at a price of 218, and we're trading right around there. And so if I do add the 1618 to this extension here, just clicking it there, so nothing too complicated there, that would suggest price could be coming down to right around 185 to 186. So. And especially too with $2, that just being a psychological level, a round whole number there, price could be coming down to there. And so I think that this unfortunately is going to, I don't have a position in this, but I would think that this is likely coming down to around at least $2 a share, and maybe it finds a floor there. But if we don't hit any don't get any closes lower than 218, maybe this is the bottom. But I think that, with it being down over 12% so far on the day, see where it closes at. But yesterday on the 7th, coming down 6% and then gapping down. And then I believe they did have their earnings report come out yesterday after hours, I believe. And this, I talked about this in the videos, and I think this is a good lesson in to really, be respecting the charts. I had talked about, this bouncing up here, but closing below this purple uptrend. So it closed below, this prior level of support, now becoming resistance. And I talked about needing to get a close above 280. What we saw instead was an open above 280 on the 6th, opening price of, let's see, 287, but then a close below. That is bearish. Then opened again below that uptrending level, closed well below. So there were signs here that this was getting rejected below that level. Always good to be paying attention to that. Move the emotions to the side and recognize that it was pretty clear here that price was going lower. And especially, with the market coming down here on the 5th, it did not move up to a technical level that suggested strength or support. It bounced to a level that suggested rejection. And so this is ultimately not too surprising. So far, low of the day, 220. Hopefully that remains the low and we do not get a close below 218. But if there is a close below 218 today and a close below 218 on Friday for the week, I think that suggests confirmation of this break and that price will be going to $2 a share. So be cautious with it. Really at a time right now, I think it's good to be cautious with all stocks, all investments. I think that if we look over at the S&P 500, I'm going to pull up the SPY because I just did some drawings with that. We're seeing a bounce here, a technical bounce approximately from this purple line, which could suggest a head and shoulders pattern. This is the SPY, the S&P 500 ETF. And that could be suggesting a measured move if we do break this neckline, if we get a bounce, maybe coming up to 540, 545. That could be the top of the right shoulder. A break could correspond with getting below, let's see, right around 520 around the middle of October. And that could suggest a measured move down to around 146 or even as low as 460, or even as low as 450. And so, I think that what we're seeing in the market is going to be bounces that are short term. And so I think that we're looking at more short term trading in the months, if not years ahead. So good to be able to make pivots, good to be agile in this trading environment, because it suggests to me that the top is in here with the S&P 500. We have been seeing bounces that have been short-lived, and I suspect that will continue. These are bear market rallies and or dead cat bounces, however you want to phrase it. I did do a video on shorting the market and semiconductors. And so I think that's a nice way to at least hedge in case one is going long in some positions. If those end up not playing out, hedging by shorting the market can be a nice way. I was able to make money on that on Monday, and I do plan on adding back into my short positions if we do start to see this bounce in the S&P 500. I'll get my average to be lower than it was on my short positions previously, which I've exited most of them. And I do feel like I will be coming down a lot lower. And this could correspond with, the end of February. So, that could be following, the inauguration. This could be related to the politics going on in the U.S. right now. That kind of makes sense in all honesty. So do be cautious, do pay attention to levels, and, do manage risk in a way that one is to not be risking more than one is willing to lose, because it's definitely a risky time in my opinion. And that's partly why I'm not doing as many videos, is just because I think that there's a lot of risk to the downside. And so hopefully that's apparent in how I talk about the stocks. But I am just sharing my thoughts. I hope that they were helpful. And with that being said, I'm going to close this down. If you did enjoy the stream, make sure you like it. Always share your thoughts, whether in the live chat or the comments down below. And make sure you subscribe to the channel for more content like this. Thank you so much for tuning in. It was a fun stream. And I will do a follow-up video on Plug Power likely over the weekend to give you kind of the week perspective, not just the daily perspective. And since this stream was on Plug Power, I'm just going to remove my drawing so it's a little bit cluttered. possible we're seeing a bottom here with a low around 193 on the day. That is a new 52-week low. That is the low for the year. But that could be, it might be some panic, as over here we've seen, prior lows. This was, let's see, the low on the 5th was 195. We could be seeing a great dip buying opportunity, but again, this could be short-lived. We do got a gap up here that be coming to a price of right around, let's see, the close on July 18th was at 292. So maybe we get a move up to there, but that could be met with a lot of resistance considering that we're potentially at the start of a bear market. A lot of people who are buying up here might want to trim and or exit positions, break even up there. So there could be a lot of resistance if we do get above 250 to 290, right around 3, also being a psychological level. So keep that in mind. Always good to be trimming on rips and then accumulating more on dips, not the other way around. And always good, in my view, to be dollar cost averaging on the way in and out, to just be managing that risk. But you do you. And on that note, I'm going to throw it up again. Make sure you like the stream. Make sure you like the videos that you do enjoy. Always share your comments, whether in the live chat or the comments down below. And thank you so much for joining. Make sure you subscribe. I hope that you guys have a great rest of the day trading, and I will be doing a live stream for the Rocket Lab earnings call that is happening after hours today. And I look forward to seeing you guys there if you're interested in Rocket Lab.